In this video, I'll be reviewing debt settlement versus debt consolidation. So let's get started. Now, first of all, we'll be looking at the similarities between them. So let's get started. Now, the first similarity that we have is goal of debt reduction. So, goal of debt reduction. Now, both debt settlement and debt consolidation are designed to help borrowers reduce or manage their outstanding debts. While they do it in different ways, the primary goal is to make debts more manageable, whether by reducing the total amount owed or simplifying repayment. Then we have simplifying debt payment. Simplifying debt payment. Now, one of the central benefits of both strategies is the ability to simplify the process of managing multiple debts. Now, with debt settlement, you typically only have to make one lump sum payment to a creditor, often significantly lower than your original debt. For debt consolidation, on the other hand, it combines multiple debts into a single loan with one monthly payment, which makes it easier to keep track of payments. Then we have focus on unsecured debt. So focus on unsecured debt. Now, both debt settlement and consolidation are most commonly used to address unsecured debts such as credit card debts, medical bills, personal loans, and payday loans. These debts do not involve collateral, and therefore both options are applicable primarily to these types of financial obligations. Then we have third party involvement. Third party involvement. So both strategies may involve working with a third-party company or professional. Debt settlement involves negotiation with creditors through a settlement company, while debt consolidation may involve a credit counseling agency or financial institution to help facilitate the loan consolidation process. In both cases, the borrower receives assistance in managing and negotiating with creditors. Then we have reduction of monthly payments. The reduction of monthly payments. Now, both approaches can help reduce monthly payments. In debt settlement, the goal is to often reduce the total debt owed, resulting in lower monthly payments. In debt consolidation, the process can
आ जाएगा
involve
वो सो
securing
आप
a
लोग एक
loan
पॉइंटर्स फॉलो
with a
करें ठीक
lower
है
interest rates or more favorable terms, which can also lower monthly payments. Both strategies can provide immediate financial relief. Then we have impact on credit score. So impact on credit score. Now, both debt settlement and debt consolidation can affect your credit score, although in different ways. Now, both options can lead to an initial decrease in your credit score, and as they involve significant changes to your debt's repayment process. However, if the debt is managed responsibly after settlement or consolidation, your credit score could improve over time as you make consistent payments. Well, the last one that we have is potential for debt-free future. So, potential for debt-free future. Now, both strategies, if followed correctly, offer the potential for a debt-free future. Debt settlement may result in being able to pay off debt for less than you owe, while debt consolidation can simplify debt repayment into a single manageable loan, ultimately allowing you to get back on track financially. Now, that is it for the similarities. Now we're gonna go ahead and look at the differences. So, differences. All right. So the first difference that we have is approach to depth. Approach to debt. Now, for debt settlement, it involves negotiating with creditors to reduce the total amount of debts owed. Borrowers stop making payments to creditors, and the settlement company works to negotiate a settlement for less than the full amount. Now, for debt consolidation, it involves taking out a new loan to pay off existing debts. This loan consolidates multiple debts into one with potentially lower interest rates or more favorable terms. Then we have impact on credit scores. Now, for debt settlement, it can cause significant damage to your credit score in the short term as it may involve late payments, defaults, or charged off accounts. Now, for debt consolidation, it may cause a temporary dip in your credit score due to a hard inquiry and opening of a new loan. But if handled responsibly, it can help improve your score by reducing credit utilization and simplifying repayment. Then we have debt reduction. Debt reduction. So for debt settlement, it reduces the total debt owed by negotiating with creditors to accept a lump sum of payment that is less than the full balance. And for debt consolidation, it does not reduce the total amount of debt, but simplifies the repayment process by merging multiple debts into one loan, potentially at a lower interest rate. Then we have repayment terms. Repayment terms. So for debt settlement, the repayment terms depend on the agreement made with the creditors. Now typically you'll pay a lump sum or make a series of payments to settle your debt for less than the original amount owed. For debt consolidation, it involves a single loan with fixed monthly payments over a set term, often at lower interest rates to make payments more affordable. Then we have duration of the process. Duration of process. Now, for debt settlement, it can take years to complete as it depends on negotiating with creditors and accumulating funds to settle debts. For debt consolidation is a quicker process involving the approval and disbursement of a new loan to pay off existing debts, often completed within a few weeks to a couple of months. Then lastly, we have eligibility requirements. Eligibility requirements. So, for debt settlement, it often requires you to be in financial hardship and behind on payments, as the creditors need to be willing to settle for less than the full debt. For debt consolidation, it typically requires you to have a good credit score or a co-signer with good credit, as the consolidation loan is based on your ability to repay the new loan. Now, that is it for the similarities and the differences between debt settlement and debt consolidation. Now, to basically summarize the whole video, now, debt settlement and debt consolidation both provide viable solutions for managing debts. Now, each catering to different needs and circumstances. Now, while they share many similarities, such as the goal of reducing debt, simplifying repayments, and offering financial relief, the strategies, processes, and impacts on credit differ slightly. Now, debt settlement is more suitable for individuals who are deeply in debt and are unable to keep up with their payments, while debt consolidation works best for those who want to simplify multiple debts into one manageable loan with potentially better terms. So that's basically it on debt settlement and debt consolidation. And I hope that this video has helped you out. And I'll be seeing you guys next time. Peace out.